ready to trade August week 2, starting with Monday, August 8th. I had a little note in my calendar that I talked about in the Twitter account this week. Talking about a couple of years ago, we were having a really great rally in August. Everybody was making a lot of money, and then we got slammed in the face, and a lot of people lost money in week 3 of August. And I kind of put that in my calendar to remind me every year that sometimes this is what happens in the summer. And right now we're, obviously coming off of a really great month-long rally in all of July, and still seem to be holding steady and setting new highs for that bounce as we started a new month this week for August. And now next week, August week 2, we're going to get CPI data on Wednesday and the PPI data on Thursday. And those two things could be where the rubber meets the road. That those two pieces of data could be what either sustains this rally even further or the wall that we run into and pull back for maybe the rest of August until we get to September 1st. Okay, let's start off looking at the S&P 500 and the action on Friday. You can see we had a big gap down open on Friday in the face of an extremely strong positive non-farm payrolls report. I read some stuff as the day went on about the internals in that report showed that huge beat was really just seasonal adjustments. Blah, 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 whatever. It was twice what expectations were, and I'm sure expectations, think about seasonal adjustments. So anyway, the market freaked out about this because, they were thinking that maybe the Fed was going to taper off and stop tightening, and now with a jobs report that is twice as strong as what was expected, that should be extremely positive news for this market. It was negative on the open, but you can see that it was bought and rallied right back up, filling the gap to the previous day's close, and then sold that off once again and spent the rest of the day trying to climb back towards the high of the day. Didn't quite make it there, but still closed with a green candle on the day. The only thing I will say, though, is that we made our high for the week on Wednesday up here at 4167.66. That's the high for August, high for the week we just traded. Thursday made a lower high, and Friday made a lower high as well. So that's kind of not good, but at the same time, we do see a nice strong buying at the end of the day taking us back up, and that's always positive to end the week. We also ended the week above the 100-day simple moving average. That's really strong. That's something that I kind of insisted upon, that you could still be long biased as long as we continue to close above the 100-day, and closing the week above it was really important, and that we did. When we look at something that's been a good tell for us, Apple, here's the Apple chart. You can see that Apple has broken out over its 200-day simple moving average, and it's been trading sideways above that 200-day for about a week and a half. And right now it's 10 days, about to cross up through its 200-day. What's going on with Apple is that it reached 150, and now it's kind of caught up in the 160s, and it's working its way through the 80-handle rule to get towards 200 over the course of time. So as long as Apple continues to hold above 150, that's holding the whole market up right now. Not just Apple, a couple of other names, but Apple is a really good tell right now for the overall market. And then finally, getting onto our daily S&P 500 charts. If we are to continue a little higher here next week, maybe Monday, Tuesday, and getting into the end of the day Tuesday, we'll start preparing for that CPI data coming out Wednesday, Thursday. I could see us maybe pushing a little further towards 4180, getting to 4200. But I see us maxing out until we see that data at around 42.27 to 28, because that is the 2022 halfway back. That's the halfway back for our year. And two very key levels: our all-time high set over here at 48.18 in the first few days of trading this year, and our low for the year, which was set in June at 36.36. So very key level here at 42.27 to 28. That is our halfway back. I don't see us really moving past that until we get that data out of the way. And if the market accepts that data, we're going to push forward and through the 200-day simple moving average and maybe establish some sideways action there, just like we've seen on Apple, and wait for some other names in the market to catch up. If we kind of hover here underneath this level and we get a bad reaction to the data, maybe that's it for the time being. Maybe that's it for the rest of the summer. Maybe we're going to see a nice pullback for a couple of weeks until we get to September 1st. If we were to pull back, the first line in the sand is going to be the 100-day. We've talked about this a few times. You can see we've poked below it on a daily basis intraday, but we've recovered and closed above it. If we were to break down below the 100-day and close below it again, we have our 10-day simple moving average, and then below that, our 20-day and our 50-day. I think ultimately our pullback is going to take us all the way to the 50-day simple moving average over the course of a couple of weeks. And there's also a little trend line that we could draw from the May high through the June high. That's this little red line that's been on the roadmap. If we were to break below the 50-day, I think it would be just so that we could touch back to this trend line that we broke out of here at the end of July. So the 50-day on back to this trend line, maybe to this June halfway back, somewhere in the lower 3900s, 3925 or so, on down to wherever this June halfway back rest sat at 3907. That to me would be the deepest pullback we would see. If I'm wrong about that, we could pull back all the way to this uptrend that comes off of the low for the year and on through the back test of that low here in July. So food for thought on where we would pull back to if we were to sort of crash and burn at 4,200 to 4,227.28 or so. Okay, hope this video helped you out. Have a great rest of your Sunday. As always, good luck and good trading.